Today we are going to cover topic how to get the most benefits out of mortgage loan. So let's kick off. So how can we prevent ourselves to be taken advantage of, how to not look like a llama, and how to buy the dream house that we always wanted. So this is all that we are going to discuss in the following video. And obviously we will be speaking about how to use mortgage loan to our biggest benefit. Just little spoiler alert, as I'm living inside Czech Republic, there will be several specificities related to Czech Republic, but I'll try to make it obvious. And of course the basic principles still apply. So let's kick off. So let's hope that our mind is not going to blow up, but what is ahead of us? So we will divide our presentation into 3 parts. We will start with negotiation. We will discuss what is loan to value, what is the size or how we can set the size of installments for mortgage loan. Is there any insurance required? What are conditions of mortgage loan and why is it good to read them? Then we will try to travel through the time into the future to learn if we should fix the interest rate of mortgage loan for a longer or shorter period in time. And then, hopefully it won't confuse us, we will continue on part about using mortgage loan. Here we will discuss that inflation is our friend, then principal and interest payoff, that they are not the same, but usually they are paid inside single installment. Then we will discuss if there are any tax benefits to use specific to Czech Republic, and then why other banks love to refinance our loan. What is it that makes them to love it so much? And then we will just conclude our presentation. So let's kick off. What is loan to value? So loan to value actually represents how much percentage is loan against the property value. So if we are borrowing money, we are borrowing some amount of money and we use the property as collateral. And the value of this collateral put against the amount of the loan is loan to value. So for example, if we have a house for 10 million and we borrow just 5 million, then it means that it's LTV 50%. The most common values of LTV in case of Czech Republic are 90%, where you usually get the worst conditions. The standard one is 80%, which is most common. That means that you have to give from your own money 20% down payment, and then you can borrow the remaining 80. And then if you borrow 70 and less, then obviously you will get the best conditions like better interest rate and so on. So how the size of installment is created? So usually they are connected with duration and interest rate. So if you select duration to be 30 years and you have some interest rate, then the bank will calculate your monthly installment based on that. And usually inside the installment you pay principal, which is the money that you borrowed, and then you pay interest, which is like the reward to the bank that she or he lended you the money. So principal, interest. I mean, we can also state that interest is actually price of the money. In case of Czech Republic, it is better to select longer duration because the conditions allow without any extra fees to pay off the loan sooner. I believe it's 25% from the remaining principal every year. So in general you can pay off your mortgage loan in 4 years if you want to. Is any insurance required and what to look out in case of insurance? So it's definitely very, very important and good to check conditions and who is insurer and who is insuree. So insurer is the person who signed the contract with insurance company, and insuree is the person who is protected by insurance. They may or may not be the same person. Then we may also hear some term called vinculation, and it's simply transferring right to get money in case of insurance case. This means usually when you take mortgage loan, the bank wants you to insure the property, and there is vinculation, which means if the property, for example, burns or something like that, then the money goes directly to the bank. Why it's important to differentiate if insurer and insuree are the same person is because if there is any problem, then the insurer, the person who signed the contract, can sue the company. But if the insurer is some third-party company which belongs into the same financial group as the bank who provided the mortgage loan, it can get pretty interesting. So many times it's quite important to look out for that and make sure that you are safe and secured. We can also offer to the bank our existing life insurance. In case we have our own life insurance, we can also use the tax benefit in case of Czech Republic. And of course, which is needed at any case, your property has to be insured. So what are the mortgage conditions? It's super important to read the conditions and be aware of many cross-sells offered, because many times the bank is offering us, we will give you 0.1 discount from the interest rate in case you take this insurance which is protecting you from inability to pay the mortgage and so on. So always we should definitely read them carefully, we should evaluate them, and we should compare loans in between one another by so-called average percentage rate. In case of Czech Republic, it's called RPSN, and it simply takes into account not just interest rate, but also fees. Because many times inside interest rate, the fees are omitted, so it may look cheap, but in reality, there is a lot of fees which will increase the price. So that's why to use APR or RPSN in case of Czech Republic. And of course, we have to always check if there are any specificities regarding mortgage loan in given country. Like for example, can you apply some tax benefits and so on. So in case of Czech Republic, we for example can pay off every year 25% of principal without any extra fees as per current conditions. And in Czech Republic, we can subtract paid interest up to 150,000 Czech crowns, which is really decreasing the price of the money and mortgage loan. And now we will travel through time to learn together. So how the bank is actually securing the money to provide us this mortgage loan. And we can use this to get an indication about the future state. I mean, should we take like longer fixation of the interest rate, or should we take shorter fixation of the interest rate? This is actually specific to Czech Republic and probably other European countries. Here, usually we can select only from so-called floating rate, which is changing as per the rate created by Czech National Bank, or we can select interest rate and period during which this interest rate is fixated. And usually it's like 3, 5, 7, 10 years. It's quite rare to see mortgage loans that are offering you fixation for 20, 30 years. So what we should do, we should check something which is called ARS, which is interest rate swap. and it's a financial product that is used by bank to secure loans. Because if we check, we can see that there are interest rate swap. The price is expressed in percentage, like the interest rate is expressed in percentage, which represents the price of the money. And here we can see interest rate swap for 1 year and then 5 years. And this is exactly what the bank will do. They will just secure your long-term mortgage loan through interest rate swap. So here we can see that in case of 1 year, the price or closing price is 5.96%, and in case of 5 years is 4.48. Obviously it's not omnipotent, but what we can do, we can check that, for example, the financial market thinks that in 5 years the interest rate would be this, and if the current offered interest rate is lower than what the market expects, we may select longer fixation period. If on the other hand it's higher, we can select shorter fixation period, so that when there is a refixation, we can take advantage of it. Inflation is our friend, because inflation in case of loan can actually do us a huge favor. So let's assume that 3% average inflation rate. In Czech Republic, during the last 23 years, average is like 2.9. So for the simplicity, we will assume the 3% average inflation rate. Then we will assume that we secured the mortgage loan interest rate as 3%. And to make things simple, let's assume we are paying once a year, so one installment after a year. So now if we take into account the inflation, so if we pay 100,000 with the end of year, the 3% inflation is already going to decrease the value of this money. So the buying power would be just 97,000. The bank will still get 100,000. But because all the prices of goods and so on has risen, then they will be able to buy the same amount of things that we would buy today for 97,000. Obviously, there is also 3% interest rate, which means that in the end of year we will in reality pay 103,000. And this means, if you remember in the previous videos, we were speaking about something which is called real interest rate, which is the interest rate minus inflation rate. So in this case, 3 minus 3 is 0. So this means that in case of bank, they are only making sure that the value of money is not decreasing, which means they can still buy the same amount of goods and services, but they are not making any money above that. So in reality, we got this mortgage loan for real interest rate of 0, which is pretty good because our real estate is appreciating and we got the money pretty cheap. So what is principal and interest payoff? So in reality, the principal and interest are paid inside the monthly installment, which is calculated based on duration and interest rate on the loan. So in case of Czech Republic, we can pay extra payment or extra installment, so it's only theoretical calculation, but we will now see how does it look like, how does the installment look like and how it changes when we increase the interest rate. I used as a source for calculation gofis.cz, and we can also model the extra installment, which is quite nice. So don't be scared by the Czech language. Here we just stated that we want to borrow 5 million, that we will pay them over 30 years, and that interest rate is 3%. So this means that monthly installment, which is removing from principal and interest, is 21,000, and on the interest we will pay 2 million and nearly 600,000. And what I want to show you here is this interesting graph, because as I mentioned, inside the installment we are paying principal and interest, and in case of 3% interest rate, the amount we are paying off from the principal will equal to the payment of interest after 7 years. So in case of 3%, it's after 7 years, which means that after 7 years, if all the conditions are the same, by paying this 21,000, we will start paying more and more and more from principal and less and less and less from the interest. But look, if we just double the interest rate, then somehow magically this equality of principal and interest payment is not after 7 years, but suddenly is after 18 years and 4 months. And also we will pay more than twice as much on the interest. So this is how scary can doubling the interest rates be. And you can see that on monthly installment we are paying 9,000, extra 9,000, which is definitely not small number, because it's nearly 50% increase, like 45 or so. Great. So are there any tax benefits that we can use in Czech Republic regarding the interest rate? So we can decrease our tax duty by paid interest up to 150,000 Czech crowns in case we bought a flat or a house which we live in. So based on a really paid interest rate, we can simply deduct this from base of our taxes. But this really means that because the tax rate is 15% in this case, so we will get only these 15% back. But we can also perceive it as lowering of our interest rate. So if we have 3% interest rate, we can just decrease it by 15%, and then we will realize that the real interest rate is like 2.55%, because we are getting some money back as tax relief. So we are not in the end really paying so much on interest rate. We can also subtract similarly life insurance up to 24k, and it's always super important to double check tax conditions as they may change, and they change every year. Now, why banks love so much refinancing of loans? So what is it that makes other banks to love it so much? I mean, it's quite simple. Before our interest rate fixation expires, we should negotiate about new interest rate, and we can usually do it 6 or 12 months before the expiration of current interest rate. The person who decides to move loan into other bank has already a long installment payment history, and the foreign bank which would be accepting this client can check this payment history, so they know that, for example, there is no issue with installment whatsoever during the last 7 years. So it's like a gold mine for them, because the property is insured, everything works already 7 years. So I mean, the risk is much lower than when the client first time takes the mortgage loan. So how can we squeeze out the maximum from mortgage loan if we just sum up? So we will use all tax benefits offered, which is 100,000 paid from interest. In reality, this translates into something like 22,500 Czech crowns. We will also use our life insurance and again deduct this from taxes, so this is another 3,600 back to us. We will also recalculate cross-sell offers from the bank and use it if it's worth. So if these extra services make sense and bring benefit, usually the bank will offer you some extra service and they will deduct something from the interest rate on mortgage loan, but we have to assess if it really makes sense for us. And we are definitely comparing the loans using average percentage rate, or RPSN, how is it called in Czech Republic. So we are definitely proactive, and before interest rate expires, we start a negotiation. We will also let other bank offer us their conditions and use it if it's better, which means we will let other bank to offer us the refinancing. We should definitely use ability to pay extra installment when it makes sense. And we also use longer duration of loan, as we can use extra installment for free. I mean, we can just pay extra installment for free, as I mentioned, 25% per year. And if we are able to pay loan fully when interest rate is not favorable, then we should do it. And this assumes that the interest rate is highly above inflation and we can't invest our money in a better way. So as you can see, the mortgage loan is not so scary. If we know how to use it, it can be actually our best friend. And I'm looking forward to seeing you during our next video.